give everybody a moment so that way I can answer this question or respond appropriately. All right, so I'm going to go ahead and get started. So this is my video response to the question about Dr. Umar's video talking about, I believe the number was like $500 million or something that goes through, whatever the number is, millions of dollars that goes through the hands of the black church that leaves the community. This is something that I know we've talked about ad nauseum, but we've never, so I'm going to just kind of respond to it. So first of all, let me say, I have a degree in finance and have been in banking my entire banking and financial services my entire career. So that is not, so this is like my baby. Plus, I am a part of, I'm a minister and who has had some behind the scenes look into what happens in quite a bit of few local churches. So I do not speak for all churches or anything like that, but strictly from a financial standpoint, these are my comments about Dr. Umar's statement about why would you put your money in the church when it leaves the community. First of all, let me say that the premise of his statement is correct. The premise being that there is a lot of money that goes through the church in the United States as a whole, specifically the African churches that are predominantly African American. There's a lot of money that goes through there. If you want to add up all of the churches in America, all the black churches in America, there is a lot of money on a weekly basis or on a monthly basis that goes through them, that goes out of the community fairly fast. His theory is, and again, for the most part, he's actually accurate, that when we put money into a bank, that money is then lent out, or a percentage of that money is lent out to those who qualify or who that bank qualifies as borrowers. So what happens is, and I'm giving this a very basic example, that when you put $100 into a bank, the reserve requirements require that that bank holds $10 of that and can lend out or do whatever it does with the 90. And so what happens typically is banks are required to have standards of lending in order by the Fair Credit Act and things like that, to make sure that there are standards by which they choose who they will deny, who they will accept, that there's supposed to be continuity in interest rates that they're charged, because there was a time in this country where African Americans were charged higher interest rates simply because they were African American, or poor people were charged higher interest rates simply because they were poor. So there was a law that was created that said that you cannot do that, and so that's part of where that comes from. Okay, so that's how we get the scenario of that. But what happens is there's also a law that says that that a bank, or not a law, but there's an act that says that anytime a banking institution opens up locations, they have to open up a certain percentage of their locations have to be in what's called low to moderate income areas. And what typically happens is in those areas, it's a lot more difficult to get lending, in part because in those areas income is lower, and for whatever reason. So we can speculate whatever reason. However, it's just what happens. So what needs to happen is so what winds up happening is, I'm sorry, I got somebody coming to my office. So what winds up happening is you get a lot of people who don't get lending in those communities because of that's what's going on. Hold on one second. Yes, sir.
Oh, yeah.
What you think?
I I need somebody to come check out my shower, because since they changing cabins,
Okay.
off, it ain't been back on right.
Okay, I'll send them up there.
Okay then.
All right.
Something else too I want to add. I forgot what it is.
Okay.
They about the laundry card. I know
Okay.
But it was something else.
Well, we'll come up there when you remember. Let us know. All right. All right. Okay. I'm sorry. So that's part of the issue. So his point is that churches, again, come into areas, into communities, or churches in general, black churches put their money into there. So under what I'm telling you, so if, for example, a person comes in and lives in the LMI area, low to moderate income area, and they come to do a loan, then what winds up happening is they can't get a loan because they don't qualify according to that bank's standards. Okay, and so what winds up happening is, can you hold on? I'm doing something, man. Can you come back? All right. So what winds up happening is, they're unable to get those same kind of funding and the same kind of resources that other places are able to get because of the LMI. Not just because of the LMI, but typically that's what happens. So now here's the problem. So if our church puts money into a bank, and that bank is not what we would call a black bank, then what's going to happen is that money, and then the bank that we put it into doesn't lend to the areas predominantly where the large concentrations where African Americans live, then he is correct. Our money goes into the church, and that church deposited into, and let's just say the largest depositor in the country is J.P. Morgan Chase. So it goes into J.P. Morgan Chase. Well, if J.P. Morgan Chase does not turn around and give loans to people in our community, which again, if the majority of us live in areas that or don't have good credit or live in LMI areas, then we don't get loans from those, and then have to go to a finance company where we did not put our dollars. So do you see how that works? So he's correct in that. Here is the problem with what Dr. Umar is saying. So I don't disagree. That's why I said I agree with the theory and with the premise of what he's saying. The problem is, and I'm going to show you. I'm going to flip the screen here. I'm going to show you guys a map of something, and I hope you guys, if you guys see this map, I want you to see this. So if you see this map, this is a map of all of the locations of black banks in this country. Okay, so do you see there's a large concentration in the Northeast? There's a large concentration in the East. So y'all see that. The further west you go, the fewer you get. Now, actually, when you get out west, like here, this is One United. This is, what's it say, Broadway, One United. That's Broadway. So One United is a bank that is headquartered, and they are right now the largest African American bank in the country. But as you saw by those dots, if those dots represent the number of black banks, we ain't got enough locations, man. So where would a church, let's just call it, this is, let me show you again. So if you are in Oklahoma City, you now, and this is new, have a One United in Oklahoma City. But, by the way, that is new, and we'll find out in a second where that location is. It's One United. If you're in Oklahoma City, their location, hold on. Location, log in, start now, help, locations. So here's the interesting part. So what you just saw is actually not a location. For one, that dot for One United was not even a location. It's just saying that's either an ATM, or which allows you to do business online. That's what that is. So their branches are in California, Florida, and Massachusetts. So the largest black bank in the country has locations in California, Florida, and Massachusetts. Y'all see the problem yet? There aren't enough locations for all of the churches to do their business with the black bank. Here's problem number one. Problem number two, many of, when a church buys a building or tries to buy a building, what happens is they go to a bank, and as a part of the condition of the loan, most banks, and again, I've spent time as a business banker in commercial, who's done commercial lending. Many of the deals are part of the prerequisite or part of the requirement of the deal is that you bring your primary banking relationship to that financial institution. So, for example, we'll say, I'll give you the $250,000 loan to buy your building or build your church, but you have to bring your main account here to our bank because we want to, basically it's a way for them to monitor your location, or excuse me, the balances, plus they want to, if there's an issue, they want to be able to have access to your accounts is really what it boils down to. And there is, for the sake of the other reason is because if we make money off of being able to lend from your deposits, we want to be able to, that's another way we want to make money. So we want to make money off the loan that we're going to give you via interest, plus we want to make money off of the interest and the investment, the way we invest your money. So remember I said that they keep $10 and do something with the 90. So part of that is they'll loan it out, but also what happens is at the end of the day, they will go and they will do investments with that money and do what's called overnight trading. And so they'll make money off of all of the deposits from the previous day. So it's another way that they make money. So they want to be able to say, we want to make more money off of this loan. Okay. That's problem number two. So if they say, we'll do this loan, but we need your deposit. If you bank with a black bank and the black bank doesn't do commercial loans, you have to take your deposit with you, or the result is you don't get the loan. Okay. The third problem is that many of the African American banks, even though we don't have locations, also don't have the services that would allow us to bank with them. So if I bank with a location that doesn't have a bunch of locations, I can offset it by being able to do things like direct deposit, electronic banking, or now a lot of places they go to where you can check scan. We could scan the checks and things like that. But a lot of the smaller banks don't have those services. And so if you don't have those services, what am I supposed to do? I can't bank with you. See the problem? And some of the ones who do, like a lot of your credit unions and a lot of your smaller banks and community banks that do have these services, they outsource them from typically a white company. So now we're in the same boat again, where all of this money that we have is going out of the community once again. Fourth problem is, here's the biggest problem and the biggest issue with that I don't think we think through when we have this conversation. The fourth problem that we have is every bank has a bank, and part of that is the Federal Reserve. But most banks bank with another bank. And so if your small black bank banks with JP Morgan Chase, guess where your money is going anyway? JP Morgan Chase. Do y'all see my problem here? So there's a lot of layers to this system that we don't talk about and that we're not thinking about when we just, in an emotional state say, yeah, Dr. Umar is correct. Yeah, his theory is correct. But again, in order to get to where he's saying we have to get to, there has to be a lot of stuff that has to go into it. Again, I'm not saying he's wrong. I'm saying that it's not just take out your money out of Chase or out of Bank of America and take it over to, One United. I'm not against you doing that. Don't get me wrong. I'm not against you doing that at all. But I'm saying that don't think that something that just because you do that, you put it in One United doesn't mean that One United at the end of the day is not going to turn around and deposit their excess balances into JP Morgan Chase. So there's an entire system that we have to look at and deal with. So here are my solutions. Here we go. So the solutions to this that I think that the way I think, and I'm hoping he was trying to get this discussion to. I was hoping, because of course we only get a certain snippet of this discussion. But the solutions I hope he was really trying to get to is, number one, is that we've got to build it. If we want to do this, if this whole nation building thing is what needs to happen, is that we've got to build an infrastructure all our own. Because again, if we're not banking directly with the Federal Reserve, but we're banking with the Federal Reserve through a conduit bank, which would be one of these larger banks that we're taking our money out of, then it doesn't really, it's kind of like we're not really doing much of anything. So we've got to build an infrastructure, and I mean all the way up from the ground up. I mean, we've got to build your own merchant services platform. You've got to build your own mortgage companies. You've got to build your own investment platform. You've got to build your own, everything. Like when you've got to build your own IT structure. You've got to build your own fraud systems. You've got to build your own everything. We've got to build all of that stuff in order to really pull off what he's talking about. There's some other things that you could do. So, but in order to get to that point, that's how you have to do it. The second thing you got to do is really, and what the real thing that we have to do is we as individuals, as individual people, have to get out of personal debt. Us getting out of personal debt really is the beginning of the solution. Because if we build wealth and we bring our own money to the table and not come from the standpoint of we are the debtor, we're in debt, then now you have real leverage, even if it's leverage in a system that does not favor you. So you can come to the table and say, I demand that you start lending more to black businesses that are opening up in the hood. Otherwise, I will take all of our investments out of here. Right now, most of the money that we get, especially like again in these LMI areas, are not coming from deposits. What makes us valuable customers to a banking institution, again, is not the deposit balances. What makes us a valuable customer is the fee income that we generate. It is the $1 billion in overdraft fees and ATM fees and bounce check fees and NSF fees that we generate. And yes, I said over $1 billion a year to the banking institution that we give simply from overdrawing our account and not wanting to withdraw money from an ATM that has the right logo on it. So if we want to do something, we got to do that. And then as we build wealth, you can pool your money together. You can do whatever the heck you want when you got enough money. You can demand whatever you want when you got enough money because you have the power and the leverage to do whatever it is that you want to do. The second thing we need to do is we have to buy life insurance. Well, why life insurance? It sounds simple. Life insurance might not help us right now, but what it does is it can help the next generation not have to be in debt. So for those of us who have, let's just say, student loans, what happens to your financial life right now if you just wiped out all of your student loans? You'd be in a much better place. So life insurance, and if it's structured properly, can be something that you leave for your children, so when they go to college, they don't have to take out student loans. So even if they choose to be a teacher coming out, living in the middle of Podunk, Oklahoma, making $32,000 a year, they don't have a $600 a month bill over their head from Sallie Mae or Navient. Total different picture. So now that money that you're bringing in, you can invest instead of trying to just barely make it. So that's why life insurance is a benefit. All right. And thirdly, we've got to build some more businesses. We've got to build, and I'm not talking about, I mean no disrespect when I say this because I have one. I'm not saying the t-shirt company. I'm not saying another hair care company. I'm talking about, when I say I'm talking about we've got to build some airlines. We've got to build some tech companies. We've got to build some merchant services companies. And a merchant services company is like, for example, like PayPal, where when people swipe their card, you do know when you swipe your card, every time you swipe your card, there's money that's made, even if it's pennies. So we've got to build those types of companies. We've got to build, some tech companies. We've got to build some schools that are some engineer. We need some engineers. We need those types of things. So that way, there is, once again, we are able to play in those types of circles instead of strictly doing retail type companies. Again, and there's nothing wrong with retail. I have one. So I'm not disrespecting them. I'm just merely saying we got to do more. So I hope that kind of answers some questions. And then, so I got to go. I got somebody else coming to my office. So if you got questions, drop them under the video, and we'll go from there. All right, later.